Hey everybody, what's up? All right, let's talk. You know what I do every morning? I wake up at 4 a.m. in the morning. I go work out or I run. Very intense workouts, or I run 5, 7, 10, 20 miles. Every day I wake up at 4 o'clock in the morning. Mental toughness is something I talk about all the time, but you cannot have mental toughness without being also physically tough and fit. But if you are overweight, if you are obese, if you are lazy, if you choose to avoid any sort of physical exercise, and I'm talking about a regimen of regular daily physical exercise. Your brain and your body are linked. Okay, your brain and your body are linked. Putting yourself through vigorous physical exercise every single day. I don't do this 3 days a week, 2 days a week, 4 days a week, 5 days a week, 7 days a week. My motto is no days off, no days off. And I put myself through challenges. You know, I posted up that video of me running in Death Valley back on July 28th. It was 130 degrees. Well, it wasn't 130 when I ran in the morning, but it was over 100. The same day I hiked in Golden Canyon, it was 130 degrees that day. All right. Last weekend, upstate New York, we did a very hard hike. 8 miles, which the entire time was an uphill scramble. A scramble is a very, very steep, rocky ascent where you basically, like the word says, you're scrambling. You're lifting yourself up over rocks. You're climbing, in a sense. So I did that up to the top in the rain. It was a torrential downpour that day. We drove up to the Catskills, and it was raining when we hiked. By the time we got up to the top, the rain had stopped, but it was muddy, it was slippery, it was unbelievable. So, I mean, I don't know, like, many people avoid vigorous physical exercise, or they do it once in a while. I am committed to it. I do it every single day. I wake up at 4 o'clock in the morning. I lift, I work out, or I run. Okay, 7 days a week, no days off, 4 o'clock in the morning. Anyway, just wanted to mention that because in order to be mentally strong, you have to be physically strong. Your body, when you have emotional stress, that impacts you physically, number one. Number two, to have a relief valve for that stress, because everybody needs a relief valve. And some people take up bad habits. Maybe they drink, maybe they take drugs. I don't do that. To have a relief valve, a relief mechanism for that stress, exercise, vigorous exercise is a natural antidepressant and a natural stress reliever. You release endorphins in the body. Anyway, enough said on that. Let me talk a little bit about this concept of the dollar shortage. The dollar shortage. Oh, there's a dollar shortage. The dollar shortage. We got to buy the dollar because we're running out of dollars. There's no place for people to go. Let me talk about that for a second, because that's a bunch of nonsense. In a fiat monetary system, that is, in a floating exchange rate system where you have a non-convertible currency, and what I mean by non-convertible is it is not set at any fixed exchange rate to gold or some other currency. It floats freely. It's not convertible at some predetermined quantity of whatever, gold or another currency. In a system like that, the demand for money is what creates the money. The system creates the money to meet the demand. I mean, if you think about it, and what a lot of you got people talk about or whine about constantly is that, oh, they're printing money. The problem with not being on a gold standard, what a lot of you nut jobs whine about a lot, is that when you're not on a gold standard, the money is printed, right? You hear that. They're printing money. They print the money, right? Exactly. Well, it's not really printing. It's electronic Money is all just electrons. I mean, it's credits and debits in an accounting system. So the demand for money, if that money is needed to acquire, to purchase goods and services, the very demand for that money creates the money in the system, either through credit or through the government printing press. All right, so the whole concept of the shortage of dollars, that's a non-concept. That's a non-concept in a fiat monetary system. Now, under a gold standard or under a fixed exchange rate system where the quantity of money is finite, right? Because on the other system with a true fiat, non-convertible floating FX system, it's infinite. You could create as much money as you want. It's the push of a button. But under a gold standard or a fixed exchange rate, the quantity of money is fixed. Under that condition, yes, the demand for money will cause the price of that money to go up, as it will also cause the interest rate to go up. And that's another thing. Why is it when the Fed printed all that money, everyone said, oh, they're printing money, right? Interest rates were at zero. It had no effect. The very creation of those dollars kept the interest rate pegged down at zero. And I've said this before, that the natural rate of interest is not positive, it's zero. The natural rate of interest for a currency issuing nation with a free floating currency, non-convertible, the natural rate of interest is zero. It doesn't need to pay anything when it has the monopoly power to issue. The payment of interest, it stems back from the days of the gold standard, and basically right now it really functions only as a type of a welfare to rich people, because I don't know a lot of poor people who own treasuries. And vice versa. When the Fed raises the interest rate, it is functionally a fiscal expansion. You are increasing the amount of money. You are raising the inflation rate because you are raising prices, and that's very well established. Okay, there's a totally complete correlation between rising rates and rising inflation. Inflation follows rates. I've said this a million times. So the argument, when we get back to the argument again about the dollar and everyone, oh, the Fed's raising rates, that's a non-argument, because rates are inflationary, and although the market does not see that right now or does not equate the two things, it will. It's a matter of time. Sometimes the market doesn't see it right away. Now, the other thing I want to talk about is, and I haven't really talked about this very much. I did mention it back in March and prior to March when it was about to happen, which was the Chinese oil futures traded in Yuan. This is a big, big deal. A big, big deal. Because it potentially upsets, or I should even say blows up, the existing order that has been around since Bretton Woods, where global oil is traded in dollars. And now with an alternative, by the way, that contract, which was launched on March 26th of this year, and I sent out a chart, a very, very interesting chart to all of my subscribers. And by the way, if you want that chart, if you're not a subscriber, just please go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. By the way, let me remind everybody that as of September 1st, the subscription rate, the monthly subscription rate of MMT Trader goes to $195 per month. It's currently at $145. Some people got in at $75. Some people got in at $100. Some people got in at $125. Some people got in at $145. It's going up to $195 a month in September. Current subscribers are not affected. Whatever your rate is now, that's your rate. And if you were a former subscriber and you quit and you want to come back, there's an amnesty period. I will let you back at your original rate. But after September 1st, it goes up to $195. And it's still a bargain at that rate, believe me. just for the knowledge aspect and the informational aspect. So you can look at a chart of the Chinese currency, the renminbi, and that thing started to fall the day they launched the oil futures. And that's a good sign, not a bad sign. It shows that the demand for Chinese currency is leading to the creation of more of that currency, and it is exerting a downward effect on the China. Now, the downward effect, I'm going to make a statement here. The downward action of the Chinese currency is a reflection of its strength, not of its weakness. Because the demand for the currency, and you know that I think it was last year, the Yuan is now included in the IMF basket, so that was a big step. Now oil futures. Folks, we're breaking an institutional arrangement, a global institutional arrangement that has been around for over 70 years. I mean, this is a big, big deal. And everybody's running around looking over here. Oh, look, the Fed's raising interest rates. Oh, sanctions, this and that, tariff. No, that's small potatoes compared to what is going on. Small potatoes compared to what is going on. Nobody sees this. I see it. My people see it. This is going to be a major, major score. A major score. I mean, I don't even have an analogy to give you, basically. I mean, this is so big in terms of the capital markets, in terms of the monetary system globally. This is so, so big. I can't even come up with an analogy, really, to kind of equate to you what is going on. I mean, how big this is. We are reaching an inflection point with this oil futures contract denominated in yuan, which, by the way, is really taken off. It's really, really active. Way, way above where prior contracts, when they were launched, with the Brent contract, when that was launched. By the way, I was a NYMEX member when they launched WTI. Took years and years and years for it to just get up to 100,000 contracts a day. I mean, yeah, now it trades millions, but... So anyway, it's a big deal, folks. It is a big, big deal. You are seeing the inflection point right now. The dollar's grip on global oil trade is being broken. The yuan is coming in to take its place. It's a long-term thing. You have to know what to do with it. But this will make fortunes for people. It will make absolute fortunes for people. And we're at the inflection point. All right, everybody. I think I'll go out and run 10 miles. See you tomorrow. Bye-bye.